I think it's even great we're asking this question because new construction was all but dead 5 years ago. And so the fact that we're even talking about new construction right now, I think is a great thing. It tells you where the market's going. In terms of working with a client that's purchasing a single family home, the process really isn't that much different, but really knowing how the builder is going to handle the financing is really where the question needs to be asked. If the builder will handle the financing themselves, the loan the consumer needs to get is exactly the same loan as they would get if they're buying an existing home. However, if the builder doesn't want to carry that risk, then the consumer does need to go out and get a construction loan. And if that's the case, then those are a little bit harder to come by, and you need to work with a lender that's well-versed in construction lending. For instance, Key Mortgage does carry both construction and end loan financing, so we carry the suite of products. And sometimes working with a lender that has both could make that process a little bit easier for the consumer and the agent. However, if the agent is going to be working with a client purchasing new construction condominiums, that's a totally different ballgame. The guidelines that are required of a builder in a project to meet certain specifications is really critical in making sure that the lender then knows how to handle that. If, for instance, they don't meet those specifications at the end, then the lender needs to have a fallback, which would be considered a non-mortgable condominium program. Working with a lender that has all of those and knows how to identify the project meeting one of those requirements is going to be critical.